All right, let's talk about the IRA LLC, sometimes called a Checkbook Control IRA. This is a super popular structure for anyone using a self-directed IRA, particularly to invest in real estate. There's other instances why it's helpful. I'm going to go over those here in the video today. Now, I'm Matt Sorensen, wealth lawyer, award-winning entrepreneur, also author of the Self-Directed IRA Handbook, the #1 book in the self-directed IRA field that actually has 3 chapters on this structure alone. I've got 3 chapters in here, by the way, over 100 citations in the book. So I know what I'm talking about here. I've read all the cases, been through all the tax code on this. This is what we do every day in our law firm and at my company, Directed IRA. All right, let's break this down and why you might want an IRA LLC and also how to use it properly. I'm going to hit both of those points. Now, the first thing I want to make sure everybody understands is an IRA LLC consists of 2 things. It requires a self-directed IRA, which I'm going to talk about here in a moment if you're unfamiliar with what the heck that is. But it also takes an IRA LLC. This is a special type of LLC. We call it an IRA LLC. The documents, the paperwork is a little different than a regular LLC. And by the way, if you already have LLCs for real estate or businesses, this LLC is different. It's going to be its own LLC separate from your personally owned LLCs or other entities you might have. So let's talk about what the heck is a self-directed IRA. Well, a self-directed IRA is an IRA that can invest in any asset allowed by law. One of the assets it could own is an LLC. Now, you could have a self-directed IRA that owns real estate directly. So I could have an IRA that instead of buying a mutual fund or a stock, the asset my IRA owns is a piece of real estate. Let's say it's a rental property. When there's income on the rental property, it goes to the IRA. When the property sells for a gain, that goes to the IRA. And that real estate income, whether it's cash flow or gain when I sell it, is building up the value of my IRA instead of my IRA building up value investing in a mutual fund or stock. Now, people do this and like to use self-directed IRAs because they feel like they'll have a better return on their investment from the real estate or other alternative assets than they might have from the stock market. So that's what a self-directed IRA is. Now, a lot of people are like, all right, Matt, well, I heard about a self-directed IRA, and you said I could buy real estate in it, and I went to Fidelity, and Fidelity told me I can't do it with my IRA. Well, that's because Fidelity IRAs can't do that. They're a brokerage IRA company. When you have an IRA at Fidelity or TD Ameritrade or any broker-dealer, they're going to let your IRA invest in the products that they sell, stocks, bonds, and mutual funds. That doesn't mean IRAs can't own real estate. That means that brokerage IRAs can't own real estate. Okay, they're restricting you to buy the assets that they offer as investments for their customers. So you need to move the self-directed IRA from a custodian like Fidelity or your brokerage IRA over to a self-directed IRA provider. That's what our company, Directed IRA, does. We're the fastest growing company in this space, and we help clients to use those accounts, IRAs, whether it's traditional, Roth, SEP, even your HSA or solo K. We offer those accounts that enable you to invest in any asset allowed by law. Real estate, whether it's a rental property, precious metals, private notes, private companies, small business. These are all assets that your IRA can actually own, but it takes a self-directed IRA. Okay, so I got the self-directed IRA set up. I moved my money from Fidelity at my IRA there, and I transferred it over to my IRA at Directed IRA. Now, when you have an IRA at Directed IRA, this is your self-directed IRA, you own it. Now that IRA can go buy an asset. Well, if you're buying real estate, one of the drags on real estate is you don't own it, your IRA does. And so our company is actually on the deed, we're on the contract. So it'll say Directed Trust Company, FBO, Matt Sorensen IRA, for example. Matt Sorensen's not buying the property. Matt Sorensen IRA is buying the property. So that's what's going to be on the contract to purchase the property. We will sign the contract upon your authorization and request. We'll send the earnest money from your IRA. When you go to close, we're going to sign the closing documents for the IRA. We're going to send the wire to close from your IRA's funds. And then income's going into your IRA account. You've got expenses or a handyman or a contractor that has to get paid from your IRA. Now, when your IRA is investing in a private fund or in a business or other things like that, that's pretty easy. The money's invested, they send distributions or dividends. But for something like a rental property, there can be a lot of back and forth, and a lot of real estate investors don't like the fact that they're going back and forth with us. Hence, why we have the IRA LLC and why this is such a popular structure. Rather than my IRA owning the real estate directly, my IRA owns an LLC 100%. That LLC in turn is going to own the property. So now my IRA's asset is 100% of the ownership of XYZ Investments LLC, or whatever I wanted to call this LLC. My IRA owns it 100%. Now, there's different ways to structure this. I'm going to go through different IRAs owning one LLC, an IRA, an individual owning an LLC. We're going to go through those options, but I just want to hit this first. This is the most popular, by the way. Your IRA owning an LLC 100%. Now, this LLC is going to have a bank account. This is an LLC business checking account. We have a great bank we work with that helps set those up. And we're going to send the money from your IRA to that LLC business checking account. Now, you're going to be manager of the LLC. Manager of the LLC is like president of the corporation. You will be the person that can sign for the LLC when you go to make a contract to purchase, when you'll hire a contract, when you're using the LLC business checking account. You'll be the manager of the LLC, so you have authority on the LLC's checking account. Now remember, you don't own this LLC, your IRA owns the LLC. So you don't put money in the LLC, you don't take money from the LLC because you don't own it. Your IRA does. So we're going to send money from your IRA to the LLC, whatever amount you designated. Let's say it was $100,000. We'll wire the money or ACH it into that LLC business checking account. Now you're manager of the LLC. Now you go to buy the property and the buyer on the purchase contract is the LLC, XYZ Investments LLC, or whatever you called the LLC, and you're signing the contract. You're cutting the earnest money check. You're wiring the money to close. You're signing the closing documents because you're authorized to act on behalf of the LLC. Oh, you need to hire someone to fix the property, to work on it, or to do the rehab. You're engaging them from the LLC and cutting them a check or using a debit card because you can have a debit card associated with the IRA LLC as well. So this puts you in a control position. The bank account aspect of it is why a lot of people call it a checkbook control IRA. We really just call it an IRA LLC, but you will have a checkbook and control of it to pay expenses, and that checking account can only be used for the IRA LLC's investments though. Like I said, you don't own this LLC, so you don't use it for your own expenses, nor can you take money from the LLC. If you're like, well, I want to take money from this, Matt, I'm in retirement now, I'm in my 60s, I want to pull money out from this. Okay, send the money from the LLC back to your IRA, and then you take a distribution from your IRA. All right, so that's really the primary benefit of the IRA LLC is it's giving you greater control of your investments. If you're buying property at auction or you're managing rentals or you've got rehabs, it just puts you in better control of managing the assets. I even use the IRA LLC for my own self-directed investments myself, and I'm the CEO of Directed IRA. I can tell people what to do. I know the buttons to push. I know the forms that need to be filled out. It's faster and easier for me to just use the IRA LLC for my own real estate investments with my self-directed account. All right, now I want to hit a couple notes on this because there are some cases on this. I go into much more detail this in my book, but there's a case called Ellis versus Commissioner, which is a guy that had an IRA LLC and he was paying himself a salary because he was the manager of the IRA LLC. That causes what is called a prohibited transaction. You cannot pay yourself from being the manager of the LLC or take any compensation because of your IRA's investments. Now, he was audited. The IRS alleged a prohibited transaction. He fought it in tax court. He lost. He fought it in the Court of Appeals. He lost. We've always told clients you can't take a management fee or a salary from your IRA LLC. It's even restricted in our IRA LLC documents. Every IRA custodian doing this is going to tell you you can't do that. So don't even try to do that. You cannot take any compensation. There's an easy case on it, Ellis versus Commissioner, that goes into the detail. Now there's another case that came out on IRA LLCs recently called McNulty versus Commissioner. And a lot of people have referred to that case to say, you can't use IRA LLCs, the court struck them down. That is not correct. McNulty versus Commissioner was someone using an IRA LLC like this, but instead of buying real estate, they were buying precious metals. They were buying gold, which your IRA can own gold. But there's a specific rule for storage of gold owned by your IRA that says the gold must be stored at a bank. And a bank under the definition is a bank, a credit union, or a trust company. What was happening in that case, the McNulty case, is the person used their IRA LLC and they stored precious metals at their home. That violated a unique rule for IRAs on storage of precious metals owned by your IRA. It didn't blow the IRA LLC or cause any other issues. It was a violation of the storage requirement. So the IRS required those precious metals to be distributed. That person lost in tax court. But the IRA LLC structure wasn't invalidated. The court just enforced the precious metals rule in that case. So be careful what you might be hearing about McNulty versus Commissioner. So those are the two big cases recently on this. There's prior cases from the 90s on this called Sorensen versus Commissioner, was where this came about. Again, a lot of detail. There's some field service advisory rulings from the IRS on this. Those are in my book too, about how the structure can work, that also talk about not taking compensation. All right, now the nice thing about this IRA LLC is once it's set up, there's no tax return required for the LLC with the IRS. This is called a single member LLC or disregarded entity for tax purposes. So you will not be required to file a tax return to the IRS. Now your IRA custodian files things for your IRA every year, but you don't have a requirement to file anything for the LLC to the IRS. Now you need to keep the LLC active in your state. Some states there's zero fees, zero things to file, like Arizona. Some states there's an $800 annual fee for your LLC and something you got to file, like California. Most states are like $50, $100 on an easy form you fill out to keep the LLC active. So you do need to make sure the LLC stays active with the state. Now let me hit some frequently asked questions we always get about the IRA LLC. Now remember, there's a rule called the Prohibited Transaction Rules for IRAs that says your IRA cannot transact with you or your spouse, your parents, or your kids. These are called disqualified people to your IRA. So for example, my IRA cannot buy real estate from me personally. Okay, I'm restricted to my IRA. My IRA can't buy a piece of real estate and rent it to my kids. Okay, that causes what's called a prohibited transaction, where your IRA cannot transact or provide any benefit to people who are disqualified under the rules. And the disqualified people are you, your spouse, all of your spouses for those of you in Utah, your kids, your parents. Okay, those are all the prohibited disqualified people. So same thing with the LLC. For example, if my IRA LLC bought a rental property, I can't rent it to my kid. Okay, that would cause a prohibited transaction. Also, let's say that my IRA LLC bought a property that's being rehabbed. I can't go in there and do the rehab myself and go work on the kitchen and rehab it and fix it all up. Whether my IRA LLC pays me or doesn't pay me, that still causes a prohibited transaction. Now my IRA can go buy a rehabbed property and I can use the IRA LLC, and the IRA LLC can pay for the rehab, the materials, people to do the work, but it just can't pay a disqualified person, which again is you, your spouse, parents, kids. So all those rules for IRAs and prohibited transactions still apply to the IRA LLC. Now the IRA LLC can invest in many different things. Like my IRA LLC's bought rental properties, it's done private money lending where it owns notes, invested in private funds and small businesses. Like the IRA LLC can hold multiple assets here. I'm just showing the rental properties. It's a common and easily understood example. All right, let's talk about how you can use what's called a multi-member IRA LLC. So here we're using two IRAs, and this could be 3 or 4, but we're gonna have more than one IRA investing into an LLC that in turn is going to go own an asset here. And I'm just showing real estate here. This could be any asset any alternative asset you want to buy. Now let's say this is my IRA and my spouse's IRA. Let's say we're going to fund the LLC with $100 grand to go buy a property that takes $100,000. If my IRA invests $40,000 and my spouse's IRA invests $60,000, we're going to break up the ownership of the LLC 40% to my IRA, 60% to my spouse's IRA. Now, a lot of people might be like, well, Matt, I thought IRAs of spouses are prohibited to each other under IRA rules. That is true, but see, your IRAs here aren't transacting between each other, where my IRA is selling something to my wife's IRA. Instead, they're co-investing into an asset in a newly created LLC. They're not buying or selling anything between each other. They're co-investing into an asset, which does not cause a prohibited transaction. There's some IRS and DOL opinions on that in my book if you want to dive deep on that. But here what we have to do is we have to break up the ownership of the LLC based on the dollars invested. So I gave the 40-60 example, so it's going to be 40%, 60% between the IRAs. Let's say it was 3 different people, friends or other family members, IRAs, 3 IRAs investing in an LLC. Each of them put in $100,000 for $300,000 total. Each IRA is going to own 1/3 of the LLC. Now, the benefit of this IRA LLC is I'm combining multiple IRAs into an LLC to increase the purchasing power of the LLC. That's where I like this. For example, I've run across clients that are like, well, Matt, I have $100K in my IRA and my spouse has $200K in their IRA, and there's a property we want to buy for $300. Neither of us can buy it with our IRA alone, but if we co-invest them into an LLC, together we have enough money to go buy that asset. That's where I like the IRA LLC, where it makes sense to co-invest with a number of different IRAs. Again, I'm showing 2, but it could be 3, 4, 5 into one LLC to buy a property. So the benefit is I'm putting multiple pools of funds into the LLC to give us greater purchasing power. Now there's a downside to the multi-member IRA LLC. The downside here is federal tax return. See, when I have the IRA LLC owned by just one IRA, it's a disregarded entity for tax purposes. But when multiple IRAs own the LLC, now it's a partnership for tax purposes. So the LLC needs to file a 1065 partnership return to the IRS and one to the state where it's investing. Now, there's no tax due on the 1065 return, but it is still something you have to file each year to track the income and expenses. And then K-1s get issued to the IRA. The IRAs typically don't do anything with them because there's no tax on them, but you do have that partnership return going to the IRS. So that's downside number one. Downside number two, if I'm co-investing IRAs of, let's say, spouses or people who are disqualified under the rules, what happens is if I funded this with 100 grand from my IRA, 200 grand from my spouse's IRA, so my IRA owns a third, my spouse's owns 2/3, if we want to get more money into the LLC, we have to follow that 1/3, 2/3, or whatever the percentage is when we first set up the LLC. So if we need $10,000 in here in the LLC to cover an unexpected expense, I'm going to have to put in 1/3 of that, $3,333 from my IRA. My spouse's IRA is going to put in the difference from hers, which owns 2/3 of the LLC. And so we've always got to follow that ownership percentages as more money's coming into the LLC or as we're sending out distributions from the LLC. Same way, let's say I got $100,000 to distribute from the LLC back to the IRAs, which, by the way, if you have profit here, you can leave it in the LLC checking account to go buy more assets. Now remember, you can't take money from the IRA LLC. You don't own it. The IRAs do. So if you're in your 60s or so or later in retirement where you want to live off the income that's generating from these assets, you would send the money from the IRA LLC back to the respective IRAs based on their ownership. So if there's 100 grand here you want to send back, 33,000 goes to your IRA, 66,600 and change, goes back to the spouses. So we're always going to send money back and into the LLC to the IRAs based on their ownership percentages. Now let's change the facts a little bit here. Let's say this is your IRA and your friend's IRA, and you put in 1/3, your friend's IRA puts in 2/3. Now it doesn't really matter about sticking to the ownership percentages. For example, if you needed $10,000 more in the LLC, one of your IRAs could just fund it and maybe your ownership goes up a little bit. It doesn't require you to go pro rata and stick to the ownership percentages between people who are not disqualified. So you have a lot more flexibility if it's non-disqualified people, which can even be like a brother or sister. So this is to say this is your IRA and your sister's IRA. That's a lot easier. We can mix up the ownership pretty easy. You can change it later. You can have one put more money in and get greater ownership. That's totally fine. But if it's spouses or anybody's IRAs that are disqualified to each other, like yours and your parents, or yours and one of your kids, or your IRA and your spouse's IRA, once we set that ownership of the LLC, it's fixed. All right, let's hit the last scenario of the IRA LLC, which is where you can use multiple IRAs and individuals to fund an LLC to go buy an asset. And this is a popular structure. Maybe you're partnering with some other people on a deal where you're putting in some IRA money, another person's putting in some personal cash, you have another family member throwing in IRA money, and it works the same way in that we break up the ownership based on dollars invested. This is version A of this structure, so there's a couple of varieties to this, but the easiest and most common would be is, hey, I'm putting in 100K from my IRA, my other friend's putting in 100K from their IRA, and then my brother's putting in 100K of their personal cash and non-IRA money. That's cool. We can still do an IRA LLC, multi-member here, going to be a partnership tax return, and we just break up the ownership based on the dollars invested. Totally fine. Now, what if this is even your IRA, your spouse's IRA, and your personal cash? That's fine too. We can do that where we break up the ownership based on dollars invested. You can have personal cash invested in the LLC plus IRA cash, and that can go buy a particular investment asset. Now, what you cannot do, though, is you cannot be like, well, I'm going to be an owner in the LLC because I found the deal, or I'm going to do the work, but I'm not putting in money. And then my IRAs are going to put in the cash. That doesn't work because you're a disqualified person to the IRA. What's basically happening there is you're getting value from the IRAs to yourself personally for doing work. That violates, again, the IRA rules, the prohibited transaction rules. But we can do this structure, and it's common, where we'll see one person, let's say a real estate investor or a business person, that's doing the work in the investment or the business, and IRAs are coming in investing the cash. That's totally fine as long as this individual getting ownership in the LLC for the work is not disqualified to the IRAs. Let's just say they're friends or other investors, but it's not like you and your spouse or you and yourself here where you're getting ownership personally for doing the work and the IRAs are investing cash. Okay, so depends here on who that individual is getting ownership for services. Now, this does require, again, partnership tax return. In this example here, the K1s from the LLC would go to the IRAs, and then the individual, for their ownership, would get a K1 to themselves personally, which will go on their 1040 and on their personal tax return. Now, remember, the documents for the IRA LLC are unique than a regular LLC. This is not something you crank out on LegalZoom. This is not an old LLC you've got laying around. Those aren't going to work. You want a new IRA LLC set up with the right documents, whether you're using Directed IRA, the best self-directed IRA company out there, or you're using another IRA custodian that allows for IRA LLCs. Make sure the documents are being done right. I have a checklist in my book that goes over the terms you need in your IRA LLC documents to make sure it's compliant and make sure it'll get approved with an IRA custodian, whether it's Directed IRA or some inferior provider. Now, the best way to get started on this is you can book a call at directedira.com to talk to one of our account specialists on setting up the self-directed IRA. We have a ton of resources there. My book is a great resource. We have webinars, podcast episodes going over the IRA LLC. You can get a consult with one of our lawyers. We've got you, and we can go over the structure and how to make sense of it for your specific situation and your self-directed investments. Please make sure you're subscribed to my channel where I'm going over the self-directed IRA strategies and other ways to help you build wealth and take control of your retirement. We'll see you next time.